We are conducting a webinar for charity. I am happy to announce that more than 5,000 people have already registered, and we have room to take another 5,000 people. If you have not registered, click on the link in the description. And if you want to know more details about the webinar, you can check this video. Hi, this is P R Sundar. Few days before, I posted a video where I said the technical analysis is useless. If you have not watched the video, you can watch it here. There were some negative comments. Some people were genuinely advising me, and many people thought actually I put a catchy caption in order to attract more readers. Let me tell you honestly, that is not true. I can tell you what has happened in my real life. I have few friends who claim that they are technical analysts. For their entire life period, they have not made even a single rupee, but still they strongly believe that technical analysis is the only way out. One of my friend's wife one day came to my house and she literally cried. And he said, "Sir, my husband is not even sleeping. Until 2 a.m. he is looking at the chart. But he's not making any money. I'm asking him to find another job, but he's so adamant that one day he will make money and he's following this." So it was my feeling towards such people. So it was reflected in the caption. So otherwise, I was not interested in drawing people to watch my YouTube video, because without any gimmick, I've been getting a lot of views for my YouTube. Okay, that is one thing. Second thing, the opinions reflected there, it was not my opinion, it was Wall Street Journal opinion. So they have conducted a study, and that is what I said. If tomorrow somebody else is doing some other study, and if they find technical analysis useful, and I will do that. And the third one, my opinion I have given. I look at everything. I don't look only at one thing, and I look at everything, and based on everything, I come to a conclusion. Once I met one friend who is a technical analyst, and he was talking to me so arrogantly. I don't care what Narendra Modi says. I don't care what Arun Jaitley says. I will look only at the chart. What chart tells me, I will do it. So I'm against that. So you have to look at everything. Here, I'm going to give you two examples where how the technical analysis were trapped. What happened on 2018 May 31st, if I'm not wrong, the Reserve Bank of India announced that FIIs can increase their shares in HDFC Bank. So before that, let me give you the introduction for the people who do not know. In every company, FIIs can invest only certain limit. Let us say 25%. That means only 25% of the HDFC Bank shares FIIs can buy. Once that limit is crossed, they are not allowed to buy HDFC Bank shares in India. So like this, for every company, there is a FII limit. So that limit has crossed. So they were not allowed to buy HDFC Bank. On May 31st, 2018, so RBI has given permission for FII to buy the shares on the next day. And also, RBI said once the increased limit is over, and RBI will let them know, then after that, they are not allowed to buy any more shares. And FIIs are so crazy about this HDFC Bank shares. HDFC Bank shares are being traded in US also. It's called HDFC Bank ADR. and that share is trading at 10 to 15% premium over the HDFC Bank share in India. You can imagine how much crazy FIIs are about the HDFC Bank. So, naturally, when they are allowed to buy more shares, next day morning, as soon as the market opens, and every FII will be buying the shares. And the share is likely to shoot up. And this one, everybody knows. So, nobody wants to sell. So, almost everybody is sure that HDFC Bank will go up by about 10% the next day morning. Let us say, I'm a fund manager here. I'm working for a US FII. US FII will be calling me and will be asking me to buy the shares. But I know that if I buy, I have to pay 10% higher. Maybe 15 minutes, 20 minutes, the FII limit will be reached. And the Reserve Bank of India will say, finish, no more buying. And then there will be no demand and the market will fall. So I will lose the money. So if I buy at 9:15, after some time it is going to fall because there will be no demand because FII selling is over. Let us say if I don't buy, then again after half an hour the FII window will be closed. I will never be able to buy. So this is a very, very great dilemma. Should I buy or I should not buy? If I buy, I am going to lose. If I don't buy, I can never buy. So what I will tell my boss sitting in US, the boss, don't worry, I'll buy the share for you, I'll take care of it. So what I would have done, I would have bought the share in cash market, is 10% higher. The equivalent quantity I would have shorted in future. So I keep doing like this. In half an hour time, RBI says no more HDFC Bank buy. So finish, I stop it. Then let us say after some time it comes down by 5-6%. I can square up the future position. I can book the profit there. So that will compensate the loss made in the cash market. So in this way, I do not have to buy the share in panic by paying 10% higher. So this is a strategy I would have deployed. Here look carefully. If you are a technical analyst watching the chart of a cash market that keeps going higher, buy side volume is higher, you will tend to go long. But if you have gone long in the cash market, so what would have happened? After half an hour, all these factors ended, definitely market would have fallen and your stop loss would have got triggered. So all those technical analysts who were playing with the HDFC Bank on that day without knowing the RBI FII window, they would have lost heavily. I'm giving you another example. In 2011, Nifty fell 15% within few minutes. But if you look carefully, Nifty is falling 15%, but the Nifty future fell only 3 or 4%. So why Nifty, when it is falling 15%, and Nifty future is falling only 3-4%? How come Nifty future trading at 10-12% premium? That is one question. Second question, how can a market fall 15% without any reason? Even the NSE was so surprised because they were not prepared. 10% down, they are supposed to close the exchange. But by the time they realize it has fallen 10%, it has already gone 15%. So it has become a shock. What NSE did, immediately they activated the surveillance system. So they found out what has happened. There was one broker called MK Global Financial Services. There one dealer, instead of putting 50 lakh order, he put a 50,000 crore order. It was an error trade. The figures I mentioned here is just for your understanding, explanation. So the real figures are different, and which is more complicated also. So there is something called basket. One basket of Nifty will cost about 50 lakh rupees. So somebody asked the dealer to sell shares worth 50 lakh he misinterpreted and sold 50 lakh baskets. So imagine, instead of selling 50 lakh, he sold 50 lakh into 50 lakh. So the market crashed 15%. So within few minutes, because the market was coming, all the technical analysts were short. And immediately NSE found out this mistake, called the MK Global, and this mistake has happened from your side. Then they say, what to do now? You sold so much of shares, you have got no delivery, you cannot give delivery, so better buy back the shares. So in panic, so they had to buy back the entire shares. So imagine how much money they have to buy, 50 lakh into 50 lakh. That is a kind of, so when they started buying, again the market shot up 15%. And whereas all the stop losses of the technical analysts were triggered. So therefore, two examples I have given, that if you are a technical analyst, nothing wrong in looking at technicals, but don't only look at technical and do the trade. You also look at many other things. And I'm telling you very frankly, the same example I've given you in my previous video also. Some people are asking, sir, in Wall Street Journal, they did mention only experts. They did not mention technical analysts. And I'm telling you very frankly, the same example I've given you in my previous video also. Some people are asking, sir, in Wall Street Journal, they did mention only experts. They did not mention technical analysts. Yes, they mention experts. But who are the experts? Experts are technical analysts and fundamental analysts. Put together, they are experts. Wall Street Journal said all of them are bad. I did not use the word expert. Why I use the word technical analyst? Because we are traders, and mostly traders don't use the fundamental analysis. Traders use only the technical analysis. So that is not a big mistake as far as I am concerned. So therefore, when you are trading, you have to consider everything. Don't look only at the technical analysis and do the trading. And 99% of the traders lose money in stock market. It is a well-known fact. It is a fact known to everybody. But then if all technical analysts are making profit, then how come 99% of the people lose money in stock market? So it's very simple thing. There is no reason for anybody to get angry with me. You come with your data. You tell me how many percentage of people, technical people, making money. You come to me, I can show you 4 doctors who are well off in life, 4 engineers who are well off in life, 4 chartered accountant well off in life. Among your circle, can you show me 4 people who are technical analysts who are well off in the life? Right? So I'm not here to decide what is right and what is wrong. And my aim is to give you the caution that no particular system works in stock market. If there is any particular system that works in stock market, then everybody will be following that. So that is what exactly I mentioned in my previous video. Hope I clarified all the points. Thank you for watching.